It's that time of year again, earnings season. And while Newmont is typically the name to kick off an earnings cycle for us, this time that crown goes to Teck Resources, who published their Q3 earnings on Wednesday morning of last week. And while the results were positive, the big story, at least from their perspective, is their massive merger with Anglo American, which was announced in early September, which is one of the largest combinations within the mining space this decade. Let's dive in. Teck Resources in the third quarter posted top-line revenue of $3.4 billion, which was an 18% increase on a year-over-year basis from $2.9 billion in Q3 of 2024. That revenue was off the back of the sale of 110,000 tons of copper and 306,000 tons of zinc, with zinc notably seeing a 14% bump in tons sold versus the year-ago period, with the increase attributed to higher sales at Red Dog due to the timing of shipments and increased production from Antamina. Teck also benefited from higher metals prices this year, with LME cash copper prices averaging $4.44 a pound in Q3, a 6% year-over-year improvement, and LME cash zinc prices averaging $1.28 a pound, a 2% improvement. Gross profit, meanwhile, improved from $478 million to $660 million. That's on a year-over-year basis, a 38% improvement, while gross profit before depreciation and amortization hit $1.2 billion, up from the prior $962 million. Teck Resources recorded a profit from continuing operations before taxes of $289 million, versus a loss of $759 million in the year-ago period. After taxes, net profit came in at $281 million, or 57 cents per share, versus a loss of $748 million, or $1.45 a share a year ago, with that loss last year largely attributed to an $828 million after-tax impairment charge taken at the Trail operations. On an adjusted basis, net profit totaled $372 million, or 76 cents per share, versus $314 million, or 60 cents per share in Q3 of last year. Adjusted EBITDA, meanwhile, improved to $1.2 billion, up from $986 million last year, a 19% improvement. Cash flow from operations, meanwhile, improved substantially year-over-year, rising from $134 million to $647 million, an increase of a whopping 383%. Teck finished the quarter with total cash and cash equivalents of $4.8 billion as of September 30th, which was essentially flat from the end of Q2. Net debt stands at $307 million. The company also declared a dividend of 12.5 cents per share for the quarter and repurchased $144 million in Class B subordinate voting shares, resulting in total returns to shareholders of $205 million for the quarter. The company also indicated that they will not be repurchasing further shares under the share buyback program as a result of the merger with Anglo American. Operationally, Teck in the third quarter produced 104,000 tons of copper concentrate, down from 115,000 tons in the year-ago period, alongside 150,000 tons of zinc concentrate, down from 158,000 tons, and 53,000 tons of refined zinc, which was down from 66,000. In terms of copper, production declines were blamed on QB, where the company has faced constraints due to the pace of development of the tailings management facility, which has led to concentrator downtime as a means of managing the rise of tailings. The core issue here is the development of a sand wedge, which has been slow due to the presence of ultrafines, slowing drainage as outlined by Teck in an update earlier this month. Broken out, QB production declined to 39,600 tons, while Highland Valley contributed 28,100 tons, Carmen de Andacollo contributed 12,900 tons, and Antamina on a 100% basis produced 104,000 tons, of which Teck has a 22.5% share. Production improved year-over-year at both Highland Valley and Carmen de Andacollo, while production was down by 7,200 tons at Antamina and by 12,900 tons at QB. In terms of zinc, Red Dog posted Q3 production of 122,000 tons, which was down by 14% year-over-year, with lead production from that mine also declining by 7% to 27,000 tons. Production declines here were blamed on lower grades and are said to have been expected under the mine plan. Trail, meanwhile, posted refined zinc production of 53,000 tons, down 13,000 tons from the year-ago period, with the decline here credited to a strategy focused on maximizing profitability in tough smelter market conditions by processing residues and reducing production. As for costing, copper total cash cost rose from $260 to $269 per pound, which on a net basis after byproduct credits saw cash unit costs drop from $225 in the year-ago period to $209 per pound in Q3 of this year. Zinc total cash cost, meanwhile, declined from 63 cents to 61 cents per pound on a year-over-year basis, which on a net basis equated to a decline from 25 cents per pound to 17 cents per pound. As you may know, Teck was forced to cut guidance earlier this month for 2025, as well as for 2026 and onward, much of which was blamed on QB, although Highland Valley notably saw reductions as well. In terms of copper production, Teck is now expecting to produce 415 to 465,000 tons, down from the prior 470 to 525,000 ton range. Net cash unit costs, meanwhile, are expected to be in the range of 205 to 230, which, based on the 9-month performance, Teck should hit the lower end of. Zinc production, meanwhile, is guided to come in between 525 and 575,000 tons in the form of concentrate, and between 190 to 230,000 tons of refined zinc, at net unit cash costs of between 45 cents to 55 cents per pound. Teck is currently expecting to come in at the high end of production guidance. Of course, we can't wrap this up without talking about the Anglo American merger, especially considering the fact we failed to cover it in video format due to our attendance at the Precious Metals Summit in Beaver Creek when it was announced. Referred to as a merger of equals, thanks in part to a $4.19 per share dividend before the deal closed to Anglo shareholders, the transaction will see the two companies come together to form Anglo Teck, which will be headquartered in Vancouver and is targeted to be a top 5 global copper producer, with annual production of 1.2 million tons. The resulting operator is expected to hold a portfolio of 6 world-class copper assets, alongside producing iron ore and zinc operations with more than 70% exposure to copper. Pre-tax synergies are estimated at US $800 million by the end of the 4th year following the close of the transaction, while $1.4 billion in underlying EBITDA revenue synergies are expected between Collahuasi and Quebrada Blanca, assets which are adjacent to each other. The deal will see Teck shareholders receive 1.33 ordinary shares of Anglo American for each share held of Teck Resources, with Teck shareholders to own 37.6% of the resulting company. The resulting issuer is expected to be listed on the LSE, JSE, TSX, and NYSE, with the transaction expected to close within 12 to 18 months of September's announcement. All right, so let's wrap it up. Q3 was a decent quarter for Teck, despite operational issues at QB and the resulting guidance cuts associated with that. Free cash flow is up thanks in part to copper and zinc being up, and there was notable growth in both EPS and adjusted EBITDA. But the reality here is that the performance is not all that important right now, provided that it is semi-consistent. Teck's valuation is now tied to Anglo's until this merger closes, and quarter-to-quarter results aren't going to change that much. All right, everybody, thanks for watching. We're going to have lots of earnings videos for you on this channel, so if you're looking for that sort of thing, make sure to check out our channel. And if there's stories you want us to cover, as always, let us know in the comment section. All right, everybody, thanks for watching.